Hi everybody, this is Gary Demos, Sentiment Timing, and this is our technical video report for Thursday, March 6, 2025. So we saw some more selling today, and I'm trying to, I know it's hard, and it may be wrong. I maybe end up being dead wrong on this, but I just think that in the, right now you got everybody panicking about the tariffs and this and that. Now you start to have even some of the Republicans saying stuff about Trump with the tariffs, and as I've mentioned, he's probably one of the most market-friendly presidents in our history. He doesn't like to see this stuff. I know he came out today and said, he's not looking at the markets. That's a bunch of bullshit. He is, but anyway, so the thing is that when everybody's panicking right now, typically this is the way I trade, is that when everybody's in the euphoria up here and only looking higher, you have the VIX pinned down at 12, you have the put call ratio at basement levels. That's when you want to start getting defensive, and when you want to either start building a short position or moving to cash, depending on what kind of trader you are. And this is what happens. And now you see the spike in the VIX, which I'll show you. The put call ratio, I have a feeling, is going to spike a bunch above the that little magenta box that I have, that I show in the premium reports. And everybody's all nervous, and they may even give him another shakeout tomorrow. But this is the level I've been saying since we were here, that we're probably coming down to the 57.09. My first target was the 57.50, but once we took that out, this was the next common area to go, which would be the 200-day moving average on the daily chart. So you can see we got a good bounce. I was telling people in the room, I told people in the report today. I even gave you guys the quantum stocks that I said, you want to start buying these when the market's in a panic. And you don't go all in on it, because there is still a chance that we're going to head lower. And if we head lower than that, this is the next pivot right below it. It's going to be right around that 56.65. But this is the next area here. You can see this is the 50-day moving average on the weekly chart, and that's right around that 56.35 level. So you have this support right at the 56.09 and or 57.09, and then you have this support at the 56.43. And the thing is that if we, here's the VIX where you can see it jumped up. So this looks like it's making a double top. It just takes a look at some of the technicals. Well, we don't really have any bearish divergences because we didn't make any new highs on it. Maybe that happens tomorrow in the morning and we get another flush out. My point is this, is that we're at levels, though, where typical, at least short-term lows are made. And with these types of readings where you have the VIX, where everybody was looking up when it was down at the 15 level, actually, it was even before. Yeah, let's just say the 15, because this is about where I started saying it. So from here, everybody's still looking up, and then from there, we get this move up. Now everybody's panicking. And the same like when we got here. When we had this big shoot up, everybody was panicking. They sold, and we went right back down again. I don't know if we're coming all the way back down, because I do believe we may be seeing a little bit of a volatility lift, meaning that it doesn't mean that we have to have these spikes like we are, but what might happen is we may just go sideways, or say even just come down somewhere into the 19 and bounce around there, just like we bounced around here the whole time, for most of the last 2 years, except for these little spikes. But I think we're going to see the VIX kind of base. It's not going to be down at these levels anymore. And one of the reasons why I'm saying that is I know I have a feeling that just my take on it is that 2025 is going to be a pretty volatile year. So that's but you can see we have fear in this market right now. So if we go to, that's not what I wanted. Hang on one sec. Okay, here we are. So if we do make that low, where, whether we made it today or we got to come down to that 650, 635 level, this is still the buy area, because this is going to be the upside target. It's going to be 59.50. So if you're buying, let's say you bought at the 57.10 today, that's a 240-point gain right here. And we're going to have moves up and down. But if we look at the 15, well, actually, I'm going to go back. So here you can see we have these bullish divergences. This is why I was saying we could get a new low. Now, the way this accelerates is actually when we take these highs out, because you have the fake low or the break, the panic low. And if this gets taken out, now you got all the shorts covering. And, you start looking at levels above here. Right now, this is my initial target. Maybe it goes a little bit higher. But on the 15-minute chart, what we want to take a look at are some fib lines and a potential pattern that they always pop out at me. But in any case, this could be, I thought this was going to be an ascending triangle. This is what I showed you in the trading room. When I said, the target's going to be all the way up near the 6,000 level. But once this got taken out, then this pattern was not in play anymore. But what could be in play is this big inverted head and shoulders pattern. So this would be your left shoulder. This would be your head, and the way that this would form would be we get a rally up to the 58.60, come back down, probably test the 57.50 area somewhere in here, and then come up. And then from there, you can see this is the left shoulder, this is the head, and this is the right shoulder. And if that was going to, again, I'm putting this out. We haven't even made the head yet on it, so this is just projections if it does play out. But in any case, you can see the upside target on this is coming right into this resistance, and that's at the 6,000 level. So this is why when you're down here, you don't panic, especially for the reasons that everybody's panicking about, and that's the tariffs. Because as I've been saying, these things could be removed instantly, and everybody who's piling up on the short side is going to have to scramble to get long or to cover, because their reasoning for being short is now removed. And that's where I'm saying, you use these panic things to build positions, and then from there you just sit back and just enjoy the ride when everybody's covering. And that's kind of the way I'm thinking about this. And whether we made the low today and we're going to make that move up and it starts tomorrow, maybe Trump walks back some of these tariffs because he's really probably getting an earful that nobody likes him, and he pulls them all together and says, all right, we're going to go move a different route on this or whatever. But in any case, when you're shorting on that kind of information, you're risking that. It's like when people short because a government shutdown, which I never really understood that whole thing. I meant, me personally, you could shut the government down forever and I'd probably be happy. But in any case, they sit there because there's a deadline coming up and they're scared, and they come up with some kind of agreement and they keep it open and the market shoots higher. Those types of reasonings to short are not it. You short because valuations are too high. They still are, even with the move that we've just made. So, and that's one of the reasons why I think we're going to have a volatile year. They need to walk back some of these valuations. They need to get more participation into the stock market, meaning that you can't have 7 stocks that are lifting up the entire market. And you saw what happened to the NASDAQ, where the high that was made, let me just go back to here because it's pretty close to the same time that the NASDAQ was, so I'm just using this. But we're talking about February 19th. So from February 19th until March 6th, the NASDAQ has dropped 10%. And that's what happens when you try to run the indexes up on 7 stocks. Unless they're perfect, and once people start selling them off, you get a 10% correction in a matter of 2 weeks, and it's not healthy for the market. So people need to start, getting out of those. Not really getting out of them, but I'm saying diversify more, where you have more stocks that are participating in these rallies, because it's not sustainable when you just have 7 stocks doing it. It's gonna, eventually they're gonna get to nosebleed levels on valuation, and fund managers are going to have to unload them, and when they unload them, they take down the whole index. So that's one of the reasons why I think we're going to have a very volatile year, and the highs may be in place, and we may just come up and do some tests up here. And if they decide that they need to make new all-time highs, I'm fine with that. It doesn't, I can't read out that far. I just believe that with the valuations the way they are, I think that the bulls are going to have a little bit of a tough time moving things up to new all-time highs. So the first thing the bulls need to do, they need to get above this 57.76, not 40 points higher. If they do that, you can see the next resistance, you could say it's right here. Let's just we'll use the moving average, because this is where it held up there, and then it's been used as resistance. But the next move is up to 58.60. Now again, if we start making this move tomorrow, and you got long when I was saying, at the 57.10, it's 150 points you just made in a couple days, and that's where I think it's going to happen. But if you remember, let's go back to the 15-minute chart. This is the pattern that I'm looking at. So when we get up here, and we probably have a very, very fast move down, this is going. Everybody who's getting washed out right here, and it goes up, they're going to be waiting for this, because guess what? It's their human nature, and the human nature is, they got crushed on the long side because they only thought that the market was going to go up. Now they got washed out. They're angry. And when it comes up here and it starts coming down, they're going to start shorting this market now. And then it holds, and now they're forced to cover. It's why the retail public is, wrong 90% of the time, because they're really just following the headlines, and they're not really reading, lifting the hood up and seeing, if there's anything wrong with the engine, meaning, complacency, valuations, and just longer term, buy or sell signals. Because if you remember, we're going off of a weekly sell signal as well as a daily. Now, the daily got worked off, meaning that the price action has filled that type of divergence. But the weekly, that's why I'm saying if we come up, still has room to go on the downside. So again, I think we're going to see whether we have to come down and up. I'm not sure. But I do believe that we're going to be seeing some type of low down here. Now, if something happens and, let's say some geopolitical stuff happens, then all bets are off the table. I'm just going off of technical analysis and how people are thinking right now, let's say the psychology of the market, and why I believe that we're going to be getting a decent bounce. So that's the resistance area. You already know the support, which I've been showing you. Those are the long-term support. And you can see just from the from this high to this low, if we do a 50% retracement, 59.30, typically they go up, especially coming off the lows. They'll come and test the 59, the 62 or the 78. So again, we're looking at 59.77, 60, 55, and that's why I like doing this. And again, I may get egg on my face tomorrow, and we take out those support levels. I mean, I don't know, obviously anything could happen, but I just, the way that I see this panic going, I just have my take is that we are trying to scrape out some type of low. So let's go over what we did in the portfolio today. Made 36.10 on the day. Now, these are my open positions, and this is why I want to show you these, because these are geared for the anticipation that we are making a low, even if we have to come lower first and then up. And this is the position I took. So the -4 here, the 5,700 puts, and then the 5,750 puts and the 5,650 puts. This is my butterfly spread. So if we open down tomorrow, these should gain a little bit of value on it, depending how low it goes. If it just goes down to the 5,700 and holds there, most likely I'm going to, this trade's going to pay off pretty well. And then the next trade I have is a calendar trade. And now what that is you notice this. These don't expire until March 10th. So I bought 4 of these for the 57.60 calls. And then I sold 2 of the 57.10 calls. So right now, let's just say we don't go up tomorrow, or we go up and we come back down and we close at let's say 57.30, or right where we did. These that I sold for $14 are going to be worth more than that on it, because these are going to have to go up, on it. But basically what it is, this is for if we get a move down, and these expire tomorrow. So unless they start moving up on it, and you can see they're pretty much offsetting each other. This is down 360, this is up 500. So this is really a trade that's for tomorrow, where I tried to protect myself on the downside. And if we end up going up tomorrow, these are going to expire, and I'll just write another one on it, but these are going to be gaining value. So this is the way I try to position myself with it. I didn't put this in a trading room because it's pretty complicated, and I just really want to watch this play out before I start recommending stuff like that. So another decent day today. If we get the market rally tomorrow, heck, we could be doing another really, really good day. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the